One of the ways that you could invest your money is through collective investment schemes. Money market funds are a type of collective investment schemes and are a perfect, easy, and low-risk investment for beginners and has many other advantages that I will tell you about in this video. My name is Agatha from the Wealth Tribe, and this is where we learn how to build wealth together. Think of yourself, Mary, Rabin, Edith, and Michael collecting your money in one basket and then giving it to a professional money manager to invest on your behalf. That is basically what a collective investment scheme is. What makes money market funds a safe investment? Money market funds has unique characteristics that makes it a safe investment because about four or five bodies are involved to make money market funds safe. The first one, as I had said, is the professional fund manager. So this professional fund manager has to be approved by the Capital Markets Authority. And then the Capital Market Authority again is involved. And as I thought, the Capital Market Authority is the governing body that regulates money market fund companies or companies that involve collecting money from investors, from a pool of investors. And then there's the custodian. So when you're investing in money market fund, and let's say you choose company X, usually when you send your money, you don't send to that company, you don't send the money to company X. Usually you send a money to a bank, and this bank is usually a custodian. So this bank holds the money on your behalf, and holds the money on behalf of the professional fund manager, and this custodian instructs the professional fund manager to invest this money according to the policies of this particular money market fund. And then there's a trustee that is involved. Even for this, it's usually a bank. So a trustee's role is to protect your interests as an investor. So one of the things that a trustee is supposed to do is become a whistleblower. So in case there is fraud or they suspect fraud while dealing with your money, they're supposed to report. They're supposed to protect your interest so that your money is invested right. And again, a trustee's role also is to keep the professional fund manager and the custodian accountable, to mean that because they have a policy or a trustee deed that governs how your money is supposed to be invested, then they are meant to hold the professional fund manager and the custodian accountable so that your money is invested right. And then finally, there is an auditor whose main role is to review the financials of the company that you're investing with, so as to make sure that your money again is invested right. Having this information is very important, is very empowering, because if you want to sign up with a money market fund company, it's very important for you to go and for you to ask them to send you information on who is their auditor, who is their custodian, who is their trustee, and to check from the Capital Markets Authority website that they are indeed regulated. That way, you're sure that you're signing up, or you're giving money to a legal company. How do you start investing in a money market fund? You only need 4 things. 1, to pick a professional fund manager. There are many companies in Kenya who offer money market funds as an investing instrument. You can check out our blog post that I will link below, where you can see a list of all companies that offer money market funds. From our blog post, you can also download a report, the latest report of the performance of these funds, which will help you make a better decision on which money market fund company to go with. Number 2, you need an application form. Each of these companies will provide an application form. Number 3, you need your documents. You will need your KRA PIN, you will need your ID, you will need your bank details, and you will need your passport photo. And number 5, you need money to invest. You need at least 2,500, though as I said before, there are companies that allow as low as 1,000 or even 100 shillings to start investing in a money market fund. What should you look out for when you're investing in a money market fund? There are 7 things I would like you to take care of or to look out for before you sign that application form, or before you submit that application form to your professional fund manager. First thing, what is the past performance of their fund. Their website should actually provide a downloadable, or should actually provide this information. And if their website doesn't have, CMA usually publishes reports of past performance of these funds. So go to the Capital Markets Authority website and download a copy of the past performance of these funds. Number 2, what is the minimum investment? So that you're ready. If a company says that the minimum investment is 2,500, then you need to have that money by the time you're opening your account. And the beautiful thing about money market funds is that they don't have penalties. So if you miss a top up, so there's first the initial investment and then you can top up every month. But if you miss a top up, there are no penalties. So you're safe. That is another thing that makes money market funds a very attractive investment. And number 3, what is the interest rate? So it's very important to check, as you're checking the past performance, it's very important to check what interest rates they are giving. And if you ever come across money market funds that is offering way above, like for example, if the average is, because the average is usually like 8%, 9% interest, if you find a company that is offering 12% or 13%, it means that this company is investing in very high risk investments, or the company is being very aggressive with their investments, which means that there is a possibility of you losing your money. So do not be attracted by high interest rates and you forget that you need to preserve your initial investment or your capital, because this is money you worked very hard for. And number 4 that you should look out for is how long has this company been in existence. I would advise you, especially if you're a beginner investor, to go with companies that have been existent for long and they have a good track record of investing in the right things and giving people back their money plus good interest. Number 5, which is very important, is the fees. Professional fund managers, or when you invest in a money market fund, you will be charged management fees because that is their job. They invest money for you and they charge a fee. Now, it's very important that you check how much they charge for this management, because if a company charges very high fees, it means it will eat into your investment, or it will eat into your interest, and therefore you will end up making losses. Remember, it was supposed to be an investment that gives you a tidy sum of money, so you do not want to make losses. So always read the fine print to make sure that the management fees are manageable. On average, most charge 2% of on average they charge 2%. So if somebody is charging above that, then run. And then number 6, something you should be very wary of is, what are they investing in? Remember, I gave you a list of the 3 things that money market funds usually mostly invest in. And I said this is commercial paper. I also said fixed deposits, and I also talked about treasury bills. So ask the company to give you a fact sheet so that you know exactly where they are putting your money. It's not supposed to be guesswork. They're supposed to have this information, and you're supposed to be provided to you. It's your right. And number 7, finally, how easy is it to withdraw your money? One thing that I tell people to invest money market funds in one way that I advise people to use money market funds is to store their emergency fund. And for your emergency fund, it means that your money should be liquid, in that you should have easy access to the money. So how easy is it for you to access your money when you give it to these companies? You should ask them, because you should have as easy access to your money as possible, so that in case of an emergency, you can easily withdraw your money and sort whichever emergency you're experiencing. And those are the 7 key things that you should look out for before you submit that application form or you sign up with a professional fund manager. What are the advantages of investing in money market funds? I'll give you 9 advantages of investing in money market funds. Number 1, the security. Money market funds are secure in that they are regulated by the Capital Markets Authority. Also, the roles of the custodian, the trustee, the professional money manager are separated, each of them independent. The roles are separated, which then makes your investment secure. And remember that your trustee is your whistleblower in case they suspect fraud, so your investment is always secure. Number 2, you can use money market funds to store your money, and which will prevent spending. Instead of storing your money in a current account or storing your money under your mattress, which will lose value because of inflation, use money market funds to store your money. And number 3, using money market funds will help you build a savings culture. So if you're struggling with saving money, or if you're struggling with the consistency of saving your money or investing your money, open a money market fund account, because in that way you can decide that you'll be depositing money in this account weekly, monthly, bi-weekly, or whichever option works for you. And another thing that will help you build a savings culture through a money market fund is the fact that you don't have access to your money. Your money is stored by your professional fund manager, or they're responsible for it, as opposed to when you have your money in your M-Pesa, or when you have your money under your mattress, or even in your purse, then it means you can spend it. And number 4, you beat inflation. And so money market funds offer a higher interest rate than the current inflation rate in Kenya. And so that means that when you invest in money market funds, then you're able to beat inflation, which means that you retain the value of your money and at the same time gain interest, or at the same time grow your money. And number 5, something I talked about before, you only need a small amount of money to start, which basically means that money market funds are accessible to all of us. With as low as 100 bob, you can start. And number 6, ease of access. It's ease of access. You can walk into any of the companies that I told you to check out in our blog post, walk into their offices, or even give them a call. In the internet age, you don't need to go to their offices. Give them a call, go to their website, apply, fill the application form, and become part of the money market fund family, if there is such a thing. And number 7, it's a low risk investment. Just like I said, it is regulated. There are many bodies that are working to make sure that your investment is safe. And number 7, it's easy to reinvest your interest. So what you do, a trick you can do is when you sign up, tell your professional fund manager to automatically reinvest your interest. So this means that you will easily take advantage of compounding, which will grow your money faster. And lastly, you can use money market funds for retirement planning. One day you'll be old. I know you don't think so, but yes, one day old age will catch up with you. And so one way that you can use money market fund is instructing your professional fund manager to send you your interest. Set up a system where the professional fund manager sends you your interest monthly into your account, which then becomes the money that you spend during your retirement. And with those 9 things, I'm sure I've convinced you to open a money market fund, which is something I'm looking forward to you telling me in the comment section that yes, you opened a money market fund with company X. What are the disadvantages of investing in money market funds? This is not a disadvantage per se, but I would caution you from using a money market fund as your ultimate investment vehicle. Why? Because most of them only offer up to 10% in interest. There are other investment vehicles that offer above 10% in interest. So if, for example, you want to invest in your retirement, I would caution you not to use money market fund for that, but instead look for another investment vehicle such as treasury bonds, which we will cover later. And so how then should you use a money market fund? There are 3 ways that I would advise you to use your money market fund. Number 1, to accumulate savings for bigger investments. For example, if you want to acquire a piece of land, if you want to have to raise a mortgage deposit, if you want to start investing in bonds, because for example, bonds have a minimum investment of 50,000 and treasury bills have a minimum investment of 100,000. So you can use a money market fund to accumulate the savings, and then after that use the money to get to start investing in something bigger. As I said, such a piece of land, a bond, a mortgage deposit, and such. Number 2 on how to use a money market fund is for your emergency fund. So if you lost your job today, how long would you last while maintaining the same lifestyle? How long would you go without being able to afford rent, being able to feed yourself, being able to have your lights on? If that answer is less than 6 months, if your answer to that question is less than 6 months, then yes, you need an emergency fund, and one way to store your emergency fund is through a money market fund. And lastly, you can use your money market fund to save for non-monthly expenses such as a dental checkup, your car insurance, school fees. For the parents, a money market fund is a perfect way to save for school fees. I've already talked about car insurance. Yes, so non-monthly expenses. It's a very good money market fund is a very good way to save for such expenses. There are 2 things that you should be cautious about when shopping for a money market fund. Number 1, the withholding tax. So your interest is charged at 15%. There's a 15% withholding tax that is charged on your interest. And for a lot of these companies, when they advertise in the daily newspaper, which they do every day, when they advertise, they usually quote their interest rate before withholding tax. And so what happens is that you have very high expectations, and for most people, you only find out that that is not the real interest when you receive your first statement. So be very cautious. Ask them what is their interest rate after the withholding tax, so that you know and you're able to do the math, and you set your expectations right about how much money you're going to make from your money market fund. And number 2, very important, no investment is 100% guaranteed, and this applies to money market funds. There is always a very important footnote in these documents, in the documents, that we always forget to read. It's very important that you read that document so that you know that, again, there's never a 100% guarantee. It's possible for a money market fund to make negative returns, which will mean that you lose all or part of your investment. And so what you need to do is read the document carefully. But at the same time, I have to tell you that this doesn't mean that you shouldn't invest, because if you refer to the beginning of this video, I said that money market funds are regulated, and there are about 4 or 5 bodies that work hand in hand to make sure that money market funds are a safe investment that you should get into.